My name is John Forney. I'm a managing director at Grant Thornton. I lead the insurance national tax practice. Today, I'll be moderating the insurance tax podcast focusing on SALT considerations for remote workers and business nexus issues due to COVID-19. On the podcast, I'll have two of my colleagues, Art Burkhart, Managing Director, SALT Insurance Tax Specialist, and Albert Arazi, Senior Manager, Human Capital Employment Taxes. Art, let's kick this off with a lead-in question. Insurance companies are confronted with the new reality whereby stay-at-home mandates and business work arrangements resulting from COVID-19 have created a remote workforce dynamic that has business nexus and tax implications. Can you please give us a little bit more color around that?
Yes. Hello, everybody. It's Art Burkhart. Thank you, John, for that great introduction. John, you raise an issue that's it's at the tip of a lot of tax directors, CFOs, and other clients in the insurance space and other businesses regarding how are they going to deal with COVID-19 implications related to employees that have now gone to all sectors and parts of the country. The standard dynamic is a remote worker was an unusual circumstance. There would be special circumstances where it did occur. But with COVID-19 and the closure of a lot of workspaces, people were forced to work from home. Surprisingly, it's worked out very well for a lot of the employees. And now, many of them are reluctant to go back to work or cannot go back to work with the heightened COVID exposure issues. So, the dynamic shows that people are now working from home quite effectively. But that's driving tax and business considerations that have to be taken into account. And from an employer's perspective, whether it be an insurance company or anything else, they have to look at and identify where are their employees, what sort of systems or protocols are in place to specifically track those employees. And that has huge implications for multiple types of taxes, whether it be an income or a franchise, a gross receipts, a sales and use, and any number of other taxes. And so that's a significant issue. In light of that type of circumstance, what do you have in place? Are these employees going to be permanently relocated? So now all of a sudden you find out as somebody in the tax or whatever department, HR, or the CFO level at your company, where do we have an increased nexus footprint? Where are we doing business because we have these employees in multiple locations? The old circumstance with remote employees, you could be subject to tax in a jurisdiction, even if you just had, one or two people working from a home, as long as it was regular and continuous. But now with COVID-19, we have a lot of teleworking people who are just specifically in place now. They've gotten comfortable with it, and that creates, but for certain guidance out there by just a few states, a nexus creating activity. So the question is, what do you do? What is the footprint of activity that you must decide what to do? Some companies are now recalling employees back to the offices. Others are going to decide to say, you know what, it works pretty well. We're going to make this permanent teleworking relationship with remote employees and put it in place. And, and how do we address those liabilities? How do we put structure so there's a control and we can manage tax risk?
Yeah, Art, that's great. And thank you for that. Alberta, same question, focusing more on the withholding and employment tax issues.
Thank you, John, for that question. And as Art mentioned in his response, there is a tremendous amount of complexity when dealing with these issues at a state and local level. And so from a payroll tax perspective, the world of remote workforces, whether it be temporarily due to COVID or permanently due to the way employers do business. From a payroll tax standpoint, that creates some complexities that also need to be considered. There's a lot of similarities in terms of what Art mentioned at the corporate level, but employers should pay attention to the payroll side of the house too. Some of the things to consider include, obviously, where your employees are located. In order to determine the employment tax exposure or the payroll tax issues that are involved, I think one of the biggest issues that employers are struggling with is understanding where their employees are working. And so that would be step one and probably the most complicated issue to deal with. That in itself is a challenge, and many employers are tackling it in different ways, whether it be the use of technology or asking employees to sort of check in when they move or they're not working at their resident location. Another issue that we need to deal with is, okay, what are the tax implications that employers are dealing with when employees are working remotely? Initially, when COVID started, we thought this would be a temporary issue and it may not have been a big deal, but now that this has lasted for 8 months, the payroll issues are compiling. So on a payroll tax level, when we're talking about payroll taxes, we're really talking about 3 different types of taxes: state unemployment tax, state income tax withholding, and then any sort of local income taxes that exist. And obviously, each of the states and localities have their own rules, which make this extremely complex, but we'll talk about some of these at a high level. From a state unemployment perspective, essentially, we need to make sure that employers understand what the rules are in each of the states and understand that there is sort of a uniform set of rules that all the states follow. And at a high level, we need to understand whether or not, or employers need to understand whether or not their employees are working in these locations temporarily, and if the expectation is that they would come back to the office, or whether this would be more of a permanent move. If there is a permanent move, some employers need to consider whether or not the state unemployment needs to be modified. Another important point when we're talking about state unemployment is generally state unemployment is also tied to any state-required disability benefits or paid family leave that exists in some states. So it's important to keep an eye out and understand the rules whenever you have remote employees working in these various locations. Perhaps the most complex of all these taxes is the state income tax withholding rules. And each of the states have their own rules that existed pre-COVID and pre this remote work environment. Some are more complicated than others. And I think that this is an area of struggle that each employer has been dealing with. At a state income tax level, generally, we're talking about where is the employee performing services, and that's generally the principal place of taxation. But you also have to consider things like reciprocal agreements, convenience of employer rules, as well as some leniencies that have been provided by the state from a COVID perspective when an employee is working temporarily there. When we're dealing with local income taxes, that is also complex. There's over 2,700 different local taxes in the U.S., most of them in the state of Pennsylvania. And dealing with those is not easy due to the lack of guidance that has been provided to date. So, as I mentioned earlier, I think that the critical step here is for employers to understand where their employees are working, where their employees are residents of, where the original work location of those employees are, and whether or not those are temporary or permanent moves, and then address the approach to state income tax withholding and other payroll taxes based on the applicable facts and circumstances.
Art, follow-up question. What can you tell us about the COVID-19 guidance issued by the states? What's available? What's not? Where's the gaps?
John, you've raised a great question. And like a lot of things out there, there's not always clear answers or enough guidance. And that's led to a lot of frustration for our insurance clients and other clients alike. They have come out, maybe about a dozen states of the 45 plus states that impose an income tax or a corporate tax, where they've effectively said, you know what, we're going to defer based on the pandemic situation right now and not disrupt the pre-COVID status quo. So to the extent I have a remote worker, we're still in COVID criteria, then you know what? We're going to leave them in place, and we will not treat them as creating taxable nexus. So that's a great answer for our businesses. It's less disruptive. It leaves it in the pre-COVID situation in place. The problem is we're at a point where it's almost getting towards the back end, hopefully the back end of this difficult circumstance, and many states with pressure in their budgets, financially and fiscally, they're looking for ways to work their way out of it. And so many of these jurisdictions, which have become, a place for remote workers to now operate safely from home, or even whatever it may be, just an alternative jurisdiction, they now, there's going to be that push to try to say, all right, at a certain point, we have to determine that this COVID declared emergency is open. And now we're going to have, remote workers in the state that create corporate nexus. And, so from a business tax perspective, that's an enormous issue. There have been a few states that have specifically given guidance. Massachusetts and New Jersey have specifically said that they're going to leave it in place until 90 days after the state of emergency is lifted. And that, but for post-COVID, then, the nexus considerations are turned on. And now you're going to have, significant presence by all of these, employees in a given state. It also raises other issues. It's not just purely the nexus, but now from an apportionment perspective, and if you still are in jurisdictions that have a 3-factor formula, you're going to have payroll and potentially property to the extent, you have business computers, business-owned property in a given jurisdiction, and those will have to be considered. And so that's a significant issue. The real thing that I want people to take as a takeaway, or maybe a best practice, is that you have to really be cognizant of these changing criteria when you will have nexus. You got to know when these specifically state of emergencies for COVID-19 are going to be over. They will be curtailed. This vaccine is coming out, and people are going to be rolling back to work or working remotely, and that will change your nexus footprint. You want to put controls in place. You want to be proactive. You cannot put your head in the sand in this circumstance. I think this gives companies an opportunity to put some procedures, protocols in place, make sure your systems are adequate to properly check and validate where your employees are working. It's something from an HR perspective, or systems, or payroll, that may be an additional cost, but ultimately you'll be able to function and know when you go to sleep at night as a CFO or a tax director that, this is one less issue that I have to worry about, and that going forward, we're going to be in the right posture to limit risk.
That's really interesting, Art. And again, knowing the insurance industry, a lot of the view would be that since insurance companies, for the most part, pay tax on a premium tax basis, that this wouldn't be directly impacting them. But as you know, within an affiliated group of an insurance entity, there's going to be non-insurance companies, third-party administrators, TPAs, and MGAs, managing general agents, that would be impacted by this. Any follow-up to that, Art?
John, you hit a great point that affects insurance businesses, and that we just can't look at purely the insurance companies, but because these TPAs and MGAs have a footprint, and now with COVID, in light of these remote workers, it goes directly to the nexus issue that is a critical consideration from a business perspective, and where they'll be taxed. Great point, John.
And I'd add to that, Art, there are some exceptions to insurance companies themselves. There are a handful of states do tax insurance companies based on income, and I would anticipate that they would also come into play. Yeah, all right. Very interesting. And, as you said, we've obviously gotten a lot of inquiries around that. Uh, Albert, same question again, focusing on payroll and withholding tax issues.
Thank you, John. Another great question. So, when we're talking about COVID-19 guidance that states have provided, the truth is, like in Art's situation, many of the states have not provided guidance. Some of the states, like New Jersey, have provided some sort of leniency whenever you have employees working temporarily in those locations, while most of the states have not. A lot of the states that did provide guidance may have provided guidance in very unique situations when we're dealing with disaster relief workers, such as nurses, or situations where they reinforce the rules that they already had in place. So, for example, New York, where a lot of insurance companies are located, has stated that they plan to enforce their convenience of employer rule just like they were in normal times. So, I think that there may be more guidance that comes out in 2021, but employers need to be wary of that and understand the rules and whether or not the COVID guidance has been provided. Now, when we're dealing with insurance companies, which was your second question there, insurance companies have the same issues that many other employers do. So if I were to give advice to an insurance company like I have to our current insurance clients, it's number one, understand where your employees are working. Two, understand whether or not this is going to be a permanent arrangement or whether this is going to be temporary and the expectation is the employee to return to that location, their original work location. And then lastly, understand the rules and implications in each of these states so that you as an organization, as a company, can make appropriate business decisions while minimizing risk to the extent possible.
Art and Albert, I really want to thank you both for this. And I also want to put out there, to the extent there are follow-up questions, please feel free to contact us. We'll leave our contact information